This is the Friday, May 13th, 2016 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Mike.
I kind of didn't realize we made you drive over from Omaha on May 13th, Friday the 13th.
You know, Friday the 13th is always a good day. It's a good day.
Is it?
Yeah.
All right. Darin the Contrarian is here in the house. I like it.
Would anything else shock you?
Now, we did not have a chance to discuss the cotton market on the program. Down $1.30 on the week. We were concerned we'd be losing acres due to all the rain that's been happening in the south and the southeast, but cotton doesn't seem to be paying attention. No. Where are we going?
This is a market that hasn't moved for a year, and it looks like it doesn't want to move over the next year. It's going to take something extraordinary. We've got to see demand pick up. We've got spreads turning the other way and going down, indicating a more bearish supply and demand situation, at least by the market's point of view. There's just no urgency to buy this market right now. We've been testing the high side. Usually what that means when you can't push through, when you have the spreads turn against you all of a sudden, it means there's a good chance you're going to go down and test the low side, low 50s again. I just don't see any urgency by any side of the market to start buying cotton at this point.
Okay. Now, I haven't been paying too much attention to cotton planting progress, but is there a possibility that we could lose cotton acres to soybeans given the run this last week?
You know, a lot of the, theoretically, yes, but realistically, then it comes down to the same issue with, can we actually lose the corn acres? It depends on what you've done with pre-plant. It depends on the fertilizer, everything else that you've put down. So theoretically, you could make the argument. Realistically, I honestly don't know if we'll see that big of an acreage switch.
Okay. Now, I want to take us to livestock. We've got a question here right off the bat from Justin in Kansas. He's asking, with all the bearish fundamentals in the cattle market, why is the basis so wide in the positive direction? Should we expect this to continue?
Basis has just been absolutely wild in the cattle markets, and it's hard to pinpoint anything. But the one thing that we really don't know is how bearish are the fundamentals really. If I look at the June-August spread, I mean, the June is so far above the August as far as in relation to its 5-year averages and its 5-year highs. There's a lot of strength in this June contract right now, meaning there's a different supply and demand, at least short-term supply and demand situation than what we think it is. It's a much more bullish, and we talked about in the program, and this should continue to help support the cash market. So while I understand all of the numbers are bearish, as far as fundamentals go, it looks to me like the market's got a far more bullish view, and that's what's going to help pull this market up. Its base is going to remain this wide. You may see futures try to come back here a little bit and narrow that basis up with the cash market somewhat.
Okay. Now, we've talked before. I mean, we've heard all of these bearish fundamentals. We've got massive amounts of cattle. We had very, very heavy cattle for quite a while. Is this a situation where we've got this bullish technical formation in place? Is the market going to have to justify continuing this further? I mean, are we going to have to get really excited about current weights to keep this thing moving?
The basic tenet of technical analysis, chart analysis, is that it already discounts what can be known about the market. So if the charts are bullish, that means it's already taken into account all of this presumably bearish news and still sees the market as going up. And that's what was impressive, not only on the short-term weekly chart that left a gap, as we talked about on the June cattle contract, but the possibility of this 2-month reversal that we've got going on in the live cattle monthly chart. So it's going to be interesting to watch. Could it all fall apart? Absolutely. We could see the spreads change and everything else. But right now, it certainly looks like it wants to continue to try to push higher.
But it's not going to be looking to take out 2014 highs. We're going to be climbing a leg here.
And then pulling back, climbing up. It's going to be very difficult to get back up to those levels, given the types of numbers that are presumably out in the country.
Okay. Now, we've got a question here from Brock in Baxter, Iowa. And this is a question I think Brock wrote just for you, Darin Newsom. Brock wants to know, why put faith in USDA numbers? He says, as a producer, we are bombarded with marketing advice. It's getting tougher to sort through the garbage. Why pay attention to USDA?
You shouldn't.
Okay.
And, as part of a media company, myself, DTN, I don't know why we do. I don't know why market to market. Anyone who is interested in the service of agriculture should find something else to do besides pay close attention to USDA. USDA reports' sole purpose are to create trade, and that's all they do. There's no service whatsoever to agriculture in the numbers, never has been. But it's not going to change, not going to change next month. So I put no faith in them whatsoever. Markets are going to do what they're going to do. We saw that classic example on Tuesday. Most of the analysts who try to outguess USDA and tell you what's going to happen in USDA reports wind up looking pretty much like they did after Tuesday's reports. It's just the nature of the beast right now.
But the reports do create trade. We saw limit up soybeans
Yes.
on Tuesday post-report.
They create trade. They create volatility. They do not necessarily create marketing opportunities, and all it does is it allows everyone in the world to trade what we're trying to make a life out of, like try to generate income off of, and it throws it up in the air and you have to wait and see how it lands. Could just as easily have been limit down. You throw a 2.1 billion bushel corn number out there and a 1 billion bushel wheat number out there, absolutely no reasons why those markets weren't limit down. Why? Because of USDA numbers that may or may not be right, may not even be close to right.
Yes. Now, you have mentioned, I just want to kind of go back in time a little bit. You have mentioned many times that USDA historically does discount soybean demand, and that we have been undercounting soybeans for the past, at least since 2012. Are we still, I mean, is their supply number in your mind still undercounted?
You know, that was the big question. And this tells me where we're at right now. Everyone's looking at this 305 million bushel ending stocks number and they're going, USDA still screwing up on demand for the new crop? There's no faith in it whatsoever. I mean, are they overestimating? Are they underestimating? Do they have a clue? I can answer the last one. There's no way of knowing. I mean, we've got an inverted new crop future spread, and that's all we need to know. The market seems to think it's much tighter than what USDA might have said, you know, previous to Tuesday.
I guess a better question than should we pay attention is, did the USDA report change any of your longer-term chart outlooks?
None whatsoever.
Okay.
As we talked about in the program, beans turned to bullish at the end of March. Corn still in a sideways pattern, hasn't changed. Wheat, who knows what it wants to do. Its charts are actually a mess, but it's trying to find a low in here. None of this seems to fit, and none of it was changed by what occurred on Tuesday.
Okay. The market tells the truth.
Market usually lets us know what it thinks.
Okay. Want to ask your thoughts here. This is from Glenn in Bryan, Ohio. Glenn Newcomer on Twitter. He says, could you please elaborate on your blog comments on how the grain markets are falling up?
This was actually my column that came out on Friday, my On the Market column. And it talked about much of what we've been talking about here today. You know, why did we see the reaction that we saw, the counterintuitive? You know, this isn't what should have happened given this set of numbers that we had come out. But it happened anyway. Why? My conclusion was I don't know. And I don't think we'll ever know. We don't know what computerized trade has built into their algorithms at this point. Was it solely the 300 million bushel? I have a hard time buying that. Was it the decrease in world ending stocks for soybeans below 60 million metric tons? It possibly could have been, but I think there's so many other things going on, and all of it feeds in. And what it really tells me, and watching it month after month after month do very similar things, I think the electronic trade is starting to discount these USDA reports as outdated themselves. I think, you know, it brings up the whole question of big data again. You know, it's a huge issue in agriculture. There's a lot of data out there, and I think that's getting fed into the computerized trade now.
Okay.
Making USDA even less meaningful if the traders aren't even going to use it.
Interesting. Final question for you. Stephen in Virginia, our good friend, Steve Ellis, Celis1994 on Twitter, is curious, will the market show the acres have switched from corn to beans, or do we need phone survey proof?
I think at some point the market could show it.
Do you think acres have switched?
No.
Okay.
I don't think they have yet. And visiting with our agronomy folks at DTN, there's a possibility we may not see. I mean, even though the prices, that price ratio spread between Nov beans and D's corn is saying, you know, beans are buying corn acres hand and foot. problem is, with the specialties that we've got now with fertilizer and herbicides and all of these things, you can't switch over. So I don't have the percentages that could, but there's a larger percentage that can't than that used to be. And so even though the market is saying, look, beans are trying to buy acres, we need more beans, may not be able to do it this year.
Okay, all right. We will see how this summer progresses. Darin Newsom, thanks for taking the time to join us.
I always enjoy it. Thanks for having me on, Mike.
And thanks to all of you for sending in your questions via Facebook and Twitter. We do appreciate it. Keep watching and have a great week.